Hello everyone, welcome back to the 20th episode of the 2026 Portfolio Challenge series. Now, not much has changed and there's a lot to talk about, so let's get right to it this week. You can see that basically nothing has changed. Yeah, let's just get to it. This video is not financial advice. So in today's itinerary, we're gonna go over ELF earnings, we're gonna go over NVIDIA earnings. I got a new stock on the watch list, which is VIST Energy. And then I just realized I haven't talked about the GameStop and eBay saga, what's going on there. And I'm not going to go over the portfolios in depth today because no changes from last week. And I just want to keep this one kind of short because it is going to run a bit long with all the talking I'll have to do, especially with the GameStop and eBay thing. So for the ELF earnings review, the price target, my new price target is 70. It was 75. And I've got a lot of opinions on this earnings. The current price is 52, and I do think it is still undervalued. Now, a few things. The main business is stalled, but they did acquire Rode last year, and they have a new product line, Naturium, which is, both of them are growing really quickly. So that's really good news, right? Even if the core business, the ELF beauty product line, even if that isn't growing as fast as they'd like, there's a reason these beauty companies keep acquiring bigger companies. So I am going to go over to the slide deck for this one. Their own slide deck. I highly recommend people listening to go and find this. It's straight from their website, their earnings. We can actually just do this right here. ELF Beauty earnings release. Yeah, just that. Then you can go to events and presentations, and it's going to be right here. So basically what it's showing in the slide deck is that one of the things that they're going to start doing is they're going to start dropping prices because ELF has been historically known as a value buy, and they've been raising the prices slowly, and so they've decided to try a few different products and dropping the prices there, and they've gotten really good feedback for that. For instance, their Skin Glow, this is the one that they showed on the slide deck. It dropped only 22% in price from $18 to $14, and it showed an increase in sales of around 36 to 38% depending on where it was selling. I'm just going to pull that up here right now. Yeah, so here you can see it. It's showing basically what I just said. A triple-digit lift on the TikTok shop, $18 to $14 drop, and a 38% lift on Amazon and 36% in stores. And that's pretty insane, I think. So I think that they're going to start doing that with more products, which is good for the core business. And then there's going to be a huge European launch for Rode, which is Hailey Bieber's product line. So Rode is growing at an insane pace, and ELF bought them up, I think it was like a year ago now. Yeah, so you can see Rode's net sales contribution was 34% from the 35% total growth this year. And they're going to be launching in 19 new European countries this year, so huge European growth. And I know that a lot of European countries will probably start using it a lot. So they're expecting a ton of growth, I think, from Rode, and they're kind of underselling it. They're saying they're expecting only 12 to 14% sales growth. 9% of that is going to be Rode growth, and then another 5% from the core business. And that is definitely sandbagging, I think. They haven't done under 20%, I think, ever, year over year. Maybe not ever, but at least in the past few quarters for sure. Okay, so they did have 14% 2 or 3 quarters ago, but recently they've had tons of growth. They actually had 3 quarters in a row with little to no growth, and then they got Rode. And I don't see that slowing down, to be honest. When we look yearly, the fiscal years themselves, we can see that it's over 20% every year, and I just don't see a reason for that to slow down, especially when they're saying 198 million adjusted net income compared to what is it right now? Let's say 40 million, or, well, this is including the really bad quarter they just had, but previous quarters it was 145 to 140 million. So they're talking a 25% to 30% increase from that. So we'll see. I am still bullish on it. I do have my issues with their spending this past quarter. They spent $320 million in operating expenses, and I'm not sure that includes the Rode acquisition. I'll have to double check that, but I'm not sure it completely includes that. And that is way too much for a quarter, especially considering how little they did in previous quarters. So they're going to have to find a way to get that under control. Their margin is going to be pretty similar to the past few quarters, so I'm not worried about the margin, 71%. But yeah, they're going to have to get their spending under control. And I do think that their CEO will do that because in the conference call, he was answering every single question. It's very impressive. He was answering every question, numbers, and he was just right into the nitty gritty numbers with everything. He knew how to answer every single question there, which was super impressive. So my price target is a bit under the analyst consensus, but I have a feeling that's going to start to come down. Yeah, I highly recommend everyone to go see the slides. Very impressive. I listened to quite a few conference calls, and it's very rare for the people to get like this deep into the numbers themselves in the slides. Like oftentimes, if at all, you'll need to read it or figure it out from their actual earnings report. And here it's just everything's laid out. Here's their estimates for next year. They showed everything that you needed to see previously. Very impressive slides. Okay, we spent enough time on ELF. Next up, NVIDIA. So price target of 272 now. It's up from 250. I have no clue how NVIDIA is doing this. I don't even know where their growth is coming from, because this is, I believe it's the biggest stock in the world right now, $5.2 trillion market cap. And it's kind of funny going from ELF. Yeah, going from ELF numbers to these numbers. These are quarterly. This is all in millions, by the way. So here it's 440 million. And then you go and look at NVIDIA and it's like 10x that or 20x that. So 81,000 million. So $81 billion in a quarter. And it's just kind of, it's a whiplash to go back and forth between these. But yeah, their margin is bigger than ever. Their profit is bigger than ever. Revenue growth of 85% year over year when it's the biggest company in the world. This is an absolutely insane stock right now. And it doesn't seem that they're slowing down. They just recently moved to China, or not moved. They visited China, Jensen Huang did, with Trump. And from what I understand, there's a good chance that they're going to start selling to China, which is basically zero of their revenue right now. I don't know. We'll see. I don't see this slowing down anytime soon. And the valuation is, it's fine. It's not huge, right? The current PE ratio is 33 with a forward PE of 22. And obviously the way they're beating estimates, this is more like a 15 forward PE. So super bullish. Again, all around phenomenal. I have no clue how they do this. It's just amazing. Again, sorry, not much to say about this. Okay, so VIST and Energy. So this is a new one for me. It's a South American energy oil stock, basically. Okay, so this is a very interesting stock to me. I am very much debating which portfolios to buy it with, because definitely my main portfolio, the 2026 main one, the value one, technically I can't because that's only American stocks. And this is not an American stock. And the deep value is also strictly American, and it's not American. So we'll see. It is still a gamble because it is only a $7 billion market cap. But this looks like a phenomenal stock. And even the price targets, this doesn't look real to me. 2,000% upside based on analysts. I'm just curious, who is analyzing this? JP Morgan, UBS, Bank of America? Yeah, so these aren't that bad. Bank of America has a very high forecast. Yeah, strong buy for everyone. We'll see, because, okay, so let me get down to why I think this stock is going to fly up, basically. Let me just pull up my projections here. It's not really projections, it's just analysis. And I'm using the same formula that I always do, which is 22 times the operating income minus the cash, and then divided by the net shares, or the total shares outstanding. And you can see here, this is the Wall Street estimated forecasted revenues, and then I extrapolate from that the operating income. And we can see that there's 30 to 60% almost every quarter. Yeah, so 38% almost every quarter. It's a very fast growing company. You can see here that their year to date, they started at $48 and now they're at 75. Their PE ratio is only at 10. Their forward PE is at 7. This is kind of like Micron, except it's only an $8 billion company. And yeah, you can see just here their growth. And what did I have for this one? I had something else that I wanted to talk about. Yeah, okay, so they're expecting tons of growth in the volume of oil produced. And so they're using realistic non-war prices for their future projections. And their future projections, they're using revenues with the oil priced at 85, 80, and 75, which when we're looking at Brent crude, which is basically what we want to be looking at. Yeah, so when we're looking at Brent crude oil, it's generally around the 75 range. So I think that is very reasonable, what they're trying to do here. with their projections. And with these projections, again, these are forecasted by Wall Street already. And more importantly, they're expecting 2 times expected free cash flow by 2030, which is only 4 years away, which is insane growth. Yeah, expected revenue of 4.2 billion, 4.9, and 5.3 respectively. And I have a feeling it's going to grow significantly more than that. They're just acquiring a ton of companies right now, or rather a ton of oil production right now they're acquiring. And this level of free cash flow for such a small company, 2 billion, yeah, their free cash flow is currently 1 billion. So they're expecting 2 billion free cash flow, and their market cap is only 7 billion. So we'll see. I expect this company to be a $30 to $40 billion market cap. That's basically what this price target is saying right here, basically 4x what it is currently. We'll see, but I will be finding a way to invest in this. I'll see what I have to clear up. The only thing I'm worried about is it's not an American stock, and I am a firm believer in the American stock market. I think there is a value to American companies with the American brand and the American consumers. And obviously this is oil production, so that's why I am giving it a bit of a pass, and I think I will be buying it. So let's get down to the GameStop and eBay saga. So GameStop basically built a 5% stake in eBay. This was about 2 weeks ago, and Ryan Cohen, the GameStop CEO, basically went up to eBay and he offered to buy the entire company of eBay at $125 a share, or $56 billion. Now, if you know anything about GameStop and eBay, eBay is a $50 billion market cap and GameStop has 10 billion, I think, where 9 billion of that is cash. Now, I am a big fan, by the way, of GameStop. I love the story. I love Roaring Kitty. I love the CEO. I think he's doing a phenomenal job. Yeah, 9 billion in cash, market cap of $9.8 billion. It's a funny way, because the only way they can do that is to dilute current shareholders of GameStop. And when you run the math, I think this guy called Budget for Life, I'll write it here, Budget for Life, he has a YouTube channel, and he explains how if it does happen, like if GameStop does end up acquiring eBay, then the combined company value with the amount of shares GameStop holders will get, even with the dilution, it should come out good for GameStop shareholders. So I don't think that's an issue for GameStop. And again, GameStop has built a 5% stake in eBay, and it is not in shares, which is interesting. It's actually very genius when you think about it, and I'll go over that soon. So yeah, they made an offer of $125 per share. eBay basically told them no, very crudely, to be honest. And then about a week after that, GameStop filed a 13D with a 6.6% stake. Again, nearly all options, so no voting power, with the strikes in the range of $84 to $115. And I'll talk about it more in the next slide. And something to note here is that GameStop only needs 20% to call an emergency shareholder meeting to try and get rid of the current CEO. And if they do vote Ryan Cohen in as CEO, and this is basically what he did with GameStop, by the way, if they do vote him in as CEO, then he can do the merger between the two companies at a more reasonable price for GameStop itself. So let's go over the options ownership summary. GameStop only owns 25,000 shares of eBay, which is not a lot, but they do control almost 30 million shares in options, which in total only cost them $7 million with an expiration of 2028, which I think that's the furthest expiration possible right now. So overall, they need to gather 89 million shares to call the shareholder meeting. That's 20% of the company. There's 444 million shares out, so 20% of that is 89. Roughly 89, it's a bit less. And so the rough calculations mean that they need to currently spend about another 14 million in options, so to lock in the options. And then after that, they can pay rough market price to execute the options. Again, I'm not sure what the premiums for their options are, but to execute all that options will cost them around $9.8 billion, which just so happens to be roughly what GameStop currently has. So they will more than likely be able to call the shareholder meeting by themselves, by the way. And so we'll know more about their actual cash on hand from dilutions, which I do think has been happening in the next 2 weeks. And yeah, so I wrote it here. This is actually a genius method to gather ownership without moving the stock price. So when you buy, I'll just pull up GameStop, or rather, I'll pull up eBay's stock price. Its price has been rising, but this isn't because of GameStop buying 29 million shares. That would be insane. In GameStop, I think they started buying at like 87, so like right around here. they started buying up eBay options and shares. And since the news came out, obviously eBay's gone up around 10 to 15% since the news of this whole fiasco. And this is obviously because GameStop offered to buy eBay at 125 per share. So eBay will try and go up to match that. And basically what I think is going to happen is eBay is going to start coming back down. And when it hits around 105 to 100, GameStop will be executing their 29 million shares, or rather their 89 million shares. And that'll be a bit less than $9 billion to execute all the shares, which is the cash that GameStop has. And because it's executing the options, I'm pretty sure that doesn't actually move the stock price, maybe just a bit. Yeah, there's weird things going on there. But I think it is pretty smart of GameStop to do it using options. So some of my opinions. I think that Ryan Cohn is phenomenal. He is very good at cost cutting. I think he's shown that with GameStop. Just looking at the turnaround for GameStop ever since he came in 2021. I'll just pull that up really quickly. He came in roughly here, and we're looking at operating income, basically in general, operating income and EPS. So you can see GameStop was very much not profitable when he came in, and it had a pretty high revenue. Yeah, so it had significantly higher revenue than it does right now, but they were losing money. And then he slowly cut the non-profitable stores, etc. And so they've just been getting more and more profitable every year with a positive EPS starting around 2 to 3 years ago. And it is actually a pretty highly profitable company right now, and it's just growing, and I think the revenue is going to start increasing pretty soon. So I do think he is a really good CEO, and I think eBay will enjoy him as CEO, not the current board. And then also GameStop, obviously Ryan Cohn will bring much of his GameStop board, who I think none of them take any, I'm pretty sure none of them take any compensation in terms of stock or cash. They just invest in GameStop, and that's what they're getting their money from, is the shares increase. For eBay shareholders, I'm pretty sure they would rather have Ryan Cohn. Obviously, he doesn't take any compensation, and I think he's been proven with Chewy and with GameStop that he is really good at turning a profit, or increasing profit as well. And I think he's basically highlighted that there's a lot that he can do in the first year to significantly increase eBay's profitability. And again, eBay itself has a lot of potential, and with them and GameStop, with the whole Pokemon cards and PSA agreement, it would allow for significant growth of both companies. And there is a lot of synergy that can happen with eBay and GameStop. Again, Budget for Life goes way deeper into this. But I do think that if GameStop acquires eBay, it's going to be good for both eBay and GameStop. We'll just see if that's even possible or not. Okay, I think that's it for this week. Again, I am not going to go over my portfolios too much. I'll just show this again. Not much has changed. I haven't changed anything personally. So we're just not going to go over that. If you want to look at my holdings, you can go back to previous weeks. So thank you guys for listening. Good luck this week. I'll see you guys next week. Bye-bye.